Hey, what's up, guys? This is Cody the Coin Raptor, and I'm here to talk to you today about Ark Invest's new Bitcoin report. All right, so Ark Invest usually puts these reports out every single month, and I try to make sure that I can cover them here on my channel. So I'm going to go ahead and give you guys my big takeaways from Ark Invest's monthly report for September. All right, so starting with skip through here, go through there. All right, so they have kind of like a summary page here, and I've highlighted some of the most important parts that I think I want to go ahead and bring to your attention. And that is starting with the point they're trying to make here is that the short-term holder cost basis crossed below its long-term holder cost basis for the first time since 2018, which usually indicates a strong market bottom. So they're saying technically, from a technical analysis point of view, that this cross will indicate a market bottom. So we're going to go ahead and take a look at that a little bit further. They elaborate more on that later. And then also for the macro picture, we're going to go ahead and also talk about the dollar strengthening and what that does to risk-on assets. All right, so let's get into it. They've gone through, and they usually have these separate categories set up for Bitcoin. They do network security, network usage, and holder behavior, and they kind of go from bullish to bearish. And right now what we have 4 bullish indicators and 2 bearish indicators and 1 neutral indicator. So that's what they're looking at right now. Seems like overall, they're bullish on the network activity information. Then we go ahead and take a look at the long-term, short-term valuation and the market sentiment, and this is largely bullish according to Ark Invest. I'm not going to go through each one of these things, but most of them are bullish. All right, so let's get into some of the big talking points here. So Bitcoin continues to trade below its 200-week moving average and investor cost basis. Now, if you guys paid attention to the last video, watched the last video that I made about this, Ark Invest put together this investor cost basis, right? And it's supposed to reduce miners' activity from the aggregate cost basis of the network. All right, so this is usually seen as lower than when I talk about realized price. It's usually lower than realized price. Right now they have it at about 19,000, and what they've done is they've recognized that this investor price that is providing a support level for Bitcoin at about 19,000. And if you've been following, watching my other videos, you can see that there has been significant buying going on when Bitcoin is kind of around that 19,000 level or so. And if it does go under 19,000, it tends to kind of return back to that point. So it seems like this investor cost basis is providing a strong support for the moment. Okay, so they also go ahead and touch upon the merge, right? And so they say, despite the successful merge, the pair, the ETH to Bitcoin pair, which is basically the ETH to Bitcoin price ratio, suggests to sell the news type of event. And that's something I've been talking about quite a bit here. I certainly thought that the merge would be a sell the news type event, and it turns out it was. They've outlined here that there is a strong resistance point right here, and this is just a little bit below 0.1. And so they've go ahead and I marked these out, but these are the points that it has been halted at. It has not been able to push above this point. So what that means is that even though Ethereum had a successful merge, it has not been able to push past this point of resistance, okay? And for people who think that Ethereum is going to flip Bitcoin, it's going to need to push past this point of resistance in the future in order for it to actually flip Bitcoin. All right. Now, they also say that they believe that the success of the merge is going to provide crucial to the crypto assets long-term performance. And they're talking about Ethereum right here. So they're very bullish on Ethereum in the long term. And I also tend to agree with that. I think that this is the first stage of a number of upgrades that are going to make Ethereum one of the most valuable cryptocurrencies on the market, and it's going to retain that position, and we're also going to see price appreciation in the future. All right, so also now they're talking about the something that I find very important here, and that is Bitcoin short-term holder and long-term holder cost bases. All right, so one thing they've noticed here is that that cross that I mentioned earlier, right, when the short-term holder basis is crossed the long-term holder basis, it usually correlates with a market bottom. So Ark Invest is coming out and saying that based on this technical analysis, this indicator alone, that could potentially signal a market bottom. Now, normally, I always like to talk about the importance of following multiple indicators and not just one single indicator. So I wouldn't personally, in my opinion, I wouldn't call one indicator the end all be all and say, well, that is for sure going to be the market bottom. But they have noticed that in their view, again, this is very bullish. So I do tend to agree with them on that end. Okay, now they're actually going to be talking about the net realized profit and loss. So this is very similar to the net unrealized profit loss that I talk about, the Nupal indicator. However, this is a realized profit loss. So they've gone through and they've already realized the profit or realized the loss and made the sale. And so they're basically saying here, Ark Invest is saying that this suggests the market has completed its cyclical capitulation. Now, I agree somewhat with that determination, but however, that being said, if we take a look at what's happened in the previous bear markets, we have January of 2019 here, and then we also have January of 2015. It has shown that it's actually gone lower than its current value right now, and I can kind of eyeball that and say that's maybe negative 0.15, and this has come all the way down to at least negative 0.20 in both cases. And I think that if you compare this with a typical bear market, that would mean that there's probably some room left to fall based on the previous two bear markets. Okay. And so also what they're talking about here is that they have this zero line, right? The zero line here, and that would indicate that the market in totality is neither in profit nor loss. So I just make sure you want to point that out. All right, so next we're going to be talking about the profitability delta. Okay, so again, what they're saying here is that it's the probability delta. The profitability delta is nearing zero, and it's hard to make this out because of the chart, the way it's set up, but they're saying that it's approaching zero, and that would mean that the market is strongly oversold. Now, the market is strongly oversold. I've noticed multiple indicators when we take a look at RSI that show the market is oversold. However, based on this profitability delta, they're saying, well, okay, that means that, it's bullish, and from here on, it should probably the sellers should be completely exhausted. However, if we take a look at the previous bear markets, we can see that in both cases, it actually went lower than zero, and it went down to about that -5 level or so. And so I would caution by saying, yeah, I mean, this is bullish, but that doesn't mean that it can't potentially go lower. All right, that's how I interpret this, what they're talking about here. All right, next. Also, very important, long-term holder supply reaches all-time highs, okay? Now, this is incredibly important because in order to establish a bottom for the Bitcoin price, you need to see an increase in the number of long-term holders. And the reason why that is because these long-term holders are likely to not sell even though they are currently losing money, okay? So they've said right here that the long-term supply denotes the number of coins held for at least 155 days, which is a meaningful threshold under which the probability that a coin continues to remain held past 155 days increases significantly. So what they're trying to say here is that the number of coins that are held for at least 155 days is significant because of their held basically for past 155 days, if they're held for at least 155 days, the possibility of them being held over that amount, over 155 days, is going to increase significantly. And that's something we need to see in order to ensure that there's a Bitcoin bottom imminent or near, because these guys, again, will continue to hold and they will not sell if there is a major capitulation event or if they're unprofitable. They also come down here and say that the coin destroyed days, the quarterly coin destroyed days is at a 12-year low, okay? So generally what that means is that right there, these low values are neutral to bullish in their opinion. So this whole thing is very bullish according to Ark. Also, they're going to be talking about the Bitcoin hash rate. And I want to go ahead and preface this by saying this is something that I'm going to do a video on about Bitcoin's hash rate. But to kind of give you a preview on this, what they're showing you here is that the hash rate has actually reached a new all-time high. And what that largely means is the fact that miners have been becoming more and more efficient with their money, with their power, and so they haven't been capitulating at a rate that we saw back in June and in July, right? So now most of that was fairly bullish, I would say. Now here comes the bearish news. They kind of stuck this in the second half of the report. So the bearish news overall is the fact that they recognize in this environment that this is an environment of increasing interest rates. So what they're saying here is that the risk aversion is that comes with the increased of interest rates. This risk aversion is just destroying all the other assets but cash, okay? And the Fed seems to be content to raise another 100 basis points. So we can see here that they're just basically showing you the yield curve, and they're trying to say that the Fed is going to just keep increasing interest rates, and when they increase interest rates, it kills any sort of risk asset. All right. Now, they've also pointed out here as well that commodity prices have fallen significantly. They've fallen from they're 19% or so from the peak, and this is the Renfitive Core Commodity Index excess return. This is the valuation metric that they're using, the CRB index, and they're basically just saying that commodity prices are coming down, which is good because if commodity prices go down, that means inflation will hopefully follow it as well, which means the Fed doesn't have to be as aggressive with its interest rate increases. And now they're also going to talk about the dollar index. This is something I talk about all the time, and the fact that the dollar index has been on this parabolic rise. That's something I've pointed out. And then there's this resistance point at 121 that it seems to be heading for right now. So what's important to point out here is that the dollar's parabolic move has been devastating to the rest of the world and should come back to bite the U.S. competitiveness, jobs, and economic activity, which will force the Fed to pivot. And this is very important, okay? Because if the economic activity gets destroyed across the board, the Fed is going to have to come and pivot, and that would be very bullish for Bitcoin. All right. They're also coming out and saying that the Treasury bonds have also been under extreme stress, and they've basically had some increased volatility, and the levels here of the volatility have not been matched except by the 2008-2009 housing crisis. So these Treasury bonds are also under stress as well. And then also very important at the end here, they mention what happened here with Credit Suisse and a Deutsche Bank. So that's been in the news a lot lately, and Ark Invest has come out and said, well, okay, they're basically under stress right now, and any sort of collapse would wreak incredible like a disastrous consequence across the economy in the short term. So it would be disastrous in the short term. However, it would also reinforce the need for an open and transparent financial system, such as the one that Bitcoin provides. Okay, so that's kind of the silver lining in that doomsday-esque scenario in which you have both of these two banks fail. Okay, so let me go ahead and give you my summary of this report. So long-term hodlers are dominant currently. This should provide a Bitcoin floor as these hodlers are unlikely to sell. Miners are becoming more resilient as well. But again, I'm going to cover more of this on an upcoming miner episode. The Ethereum merge was a sell the news type of event, which we thought was probably going to be the case a couple of months ago. And the macro environment is still terrible for Bitcoin and crypto. So this the worsening economic conditions in the U.S. and abroad will cause the Fed to pivot, which would hopefully be bullish for Bitcoin. A potential failure of Credit Suisse or Deutsche Bank will reinforce the need for Bitcoin and other transparent financial systems. Again, that's kind of what we talked about there on that last slide. But that's my takeaways from the Ark Invest report. I think overall it is bullish. Not a big surprise there. But it is also, I would call it, more cautiously optimistic on the state of the market. I've made my own videos and made my own thoughts apparent about how I feel about the Bitcoin market and cryptocurrency. And if you're curious on that, just check out some of my previous videos in which I've talked about specifically the state of Bitcoin. That covers my feelings on the matter. So that's all I've got for you guys today. I'm Cody the Coin Raptor, and I hope to see you in the next video.